Good morning, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. As always, I am your host, Real Estate Cody, and with me in the co-pilot seat again is Mr. Coffee Connoisseur Brian Alfaro. Good morning, buddy.
What's up, Cody? Good morning. How are you?
I'm good. So we recently survived another hurricane, which, to be honest with you, at least where we lived, I didn't even know there was a storm coming through, right? But you had a heck of a day after at your coffee shop.
Yeah, the hurricanes and tropical storms are always interesting. I've lived here my whole life. I think I have a story for each one of them, at least one. So it's definitely been an interesting week, but all is good. All is back to normal today. And hopefully we get through this season without any major issues to any of our businesses and also any of our assets.
Yeah, no, I don't think any of our coastal counties can afford any more storms right now. We need a break for a few years. But anyway. Well, man, I'm excited about our very special guest today, Brian. Tell the audience who that is.
Today, we have in the hot seat Mr. Ben Suttles from Disrupt Equity. Ben has been an entrepreneur for the last 15 years and first started his career in IT sales and business development and then moved on to management. His background in management and sales has helped propel him into commercial real estate, which he started in 2013. Over the last 8 years, he has been involved in the acquisitions and asset management of 12 large multifamily properties. I think this bio might be a little outdated. I'm sure there's some more in there. I'll let you talk about that, Ben, totaling over $200 million in assets under management and the purchase and the sale of over 2,500 units. Ben, we're so excited to have you on the show. Welcome.
Thanks, guys. Appreciate it, man. Going back, I'm here in Houston as well. So I was glad that tropical storm didn't, you never know if they're going to be bad or if they're going to be, nothing, right? So better to be prepared. So I'm glad that it wasn't as bad this time for a lot of people. I know there was some flooding, but hopefully I can add some value today, and looking forward to it.
Well, Ben, Brian and I always talk about how fortunate we are to live in a place like Houston with proximity to guys like yourself, you and Ferris over at Disrupt. And, it's always a pleasure to connect with you guys. And so looking forward to learning from you again today. But it would be hard for me to imagine that there's not too many people that don't know you guys, but they must be living under a rock. But in case they don't, tell the audience a little bit more about yourself and your background.
Well, Brian did a great job. The bio might be off by, a few hundred units or, 10 or 20 million in assets under management. But, beyond that, I was in sales for about 15 years, did very, very well. That allowed me to kind of get into real estate. It was something that I was passionate about for quite some time. Read Rich Dad, Poor Dad, as I'm sure a lot of your listeners probably. That's how a lot of people got started. It's that kind of that light bulb moment for a lot of people. And, I kind of fumbled around with single family for a little bit and, ultimately decided that commercial real estate was a little bit more in line with my skill set. And, it certainly helps when you can tack a couple extra zeros onto the purchase price, raising equity was kind of more in line with what I had done in IT, which was kind of, pitching people on opportunities and, doing presentations and stuff like that. So, started kind of getting into it in 2013, joined a group in 2014, did that for a couple of years, kind of learned the business, met a lot of great people, kind of struck out on my own in 2016, started a meetup, which Cody and Brian, come to as well. And we've been doing that every month, well, except for COVID, of course. Since then, so about 5 years. And, that's where I met Ferris, who's now my business partner at Disrupt Equity. And in 2017, I was kind of coming off of another partnership, good group of guys, but, I was really looking to scale and create a commercial real estate firm, and go out and really acquire a lot of assets. And those guys were kind of looking for more of a passive role. And so Ferris is a young guy, knows a lot about data and processes and IT. And, I know a lot about sales and marketing. So it was a good complementary skill set between us two. And like I said, created Disrupt Equity in 2017. And we've been buying multifamily ever since. This last year, because of COVID, kind of everybody had a little bit of extra time on their hands. So we kind of doubled down. We had created our property management company prior to COVID, but really doubled down on that, and we continue to try to improve on that and make that the best property management company that can be. And then we also own a couple other companies as well, whether it be insurance and financing. And, excited to, continue to see the market's hot. hopefully, we can kind of find some more deals. Right now, it feels like we're getting beat out left and right, but God bless the people that are buying some of this stuff, because I just don't know how some of them making some of the numbers work. But it is what it is, man. So yeah, that's kind of my story, man. I'm sticking to it.
Oh, we appreciate that, Ben. And I tell you, we joke, but it's always refreshing to hear guys like yourself with the success that you have having the same trouble that we are.
It's tough, man. It's very tough. And people are extremely competitive. I wouldn't call it aggressive. I would just say that sometimes, they're really betting on the future, right? And that future rent growth and that future, asset values going up. And I think for the foreseeable future, we probably will, from an inflation standpoint, right? Rents are going up, so therefore values are going to go up, right? But you're going to kind of get to an inflection point if wages don't keep up with, the rent growth. You're going to have problems on some of these properties, right? So the other thing that COVID kind of taught us is, Class C workforce housing, great, still a great niche. We're coming out with another project in DFW that's in line with that, but we're focusing more of our energy on the Class B and A- space, because really COVID wasn't a big, it was kind of a thing, but delinquency, and people not paying rent, that was more Class C properties. And so, what COVID has taught us is that we need to, pretty much mitigate our risk by going into kind of a nicer asset class that's going to have maybe higher paying tenants, tenants that have more white collar jobs that wouldn't be affected by future shutdowns or future variants. There's a Delta, there's going to be a Lambda, COVID is going to be something that we're going to have to live with, right? And depending on how bad one of those variances is, there could be future lockdowns, right? So we're trying to focus our energy on primary markets where the economy is diversified and growing and booming, right? We're in Texas. We love Georgia. We love Florida. All of those markets are booming, right? So there's no surprise that's why we're focusing on those. And there's other great markets too, but those are the three that we focus on. And then going for, properties where the tenant profile is more kind of working class, professional, can work from the house and do Zoom meetings. They're not going to lose their job because that bar or that restaurant shut down again, right? And so that would be my piece of advice to some of your listeners is, I know people are going to say, well, those are more expensive. I get it. I understand. And sometimes you have to leg into those, right? Because you have to raise equity for what we do. But, try to strive that's the end goal. Because, any other major catastrophe, those folks are usually the ones that are going to get hurt the quickest because they don't have the savings, right? And you saw that back in 8, 9, and 10, right? The Class C kind of, it kept churning along, right? Asset values didn't drop through the basement, but those people, because they don't have savings, are going to be the first ones that are going to stop paying rent, right? And then you're going to start having problems. So that's been another thing that we've kind of, pivoted into since COVID as well.
A lot of great takeaways there, Ben, and a lot that we can go back and digest. A lot of nuggets shared already. But to your point about people arguing the cost, I guess, of going into the A space or whatnot, you have to realize, especially right now, is really there's very little spread in the acquisition cap rates between your C class, your A class. And it's like, if you're going to pay that premium, you might as well just go ahead and upgrade and pay for a better product or a better building, right?
You hit it right on the head, man. We started noticing that those spreads were almost nothing, and in some markets like Atlanta, Class C stuff is trading at a lower cap rate than a Class A product. Right. And so sometimes they're going to inverse, whereas before that's never happened. Right. But people are chasing the value add. And I think in some cases, and that's why that's happened. But you hit it right on the head. Right. If you're going to have the same level of return, right, why wouldn't you step into something that you're going to have less deferred maintenance on, less tenant problems on? Ultimately, it's 20 or 30 years newer. Right. So the building, construction, everything is going to be more up to code. It's going to be longer lasting. We made that decision as a shop that we weren't going to necessarily stop Class C because we made a lot of money doing that, but we were going to start more and more focusing on the newer stuff.
Yeah, it makes total sense. And I think, you were alluding to, the COVID pandemic and this post-pandemic recovery, I think a lot of people, I'd argue almost anybody, was really surprised to see how we've responded in this economic recovery, right? I mean, you had this injection of all of this fiscal policy and stimulus, quantitative easing. You have, CPI that's incredibly high right now, inflation, all these other metrics we're talking about, right? And I think everybody through COVID was like, here's the correction, like here's going to be the tipping point, right? And then it like paused for a second, but man, once things started opening back up, it just really just completely accelerated.
It was like a rubber band effect, right? Like, I mean, like you kind of, there's a little bit of a pullback, I think for, I call it 3 to 4 months from like April 2020 to, let's call it July or August of 2020. People were kind of panicked a little bit. They didn't really want to make a move. There wasn't a lot of transactions. And then let's call it August of 2020, things started ripping and roaring. Then once we got past the election and all the stuff that came from that, right, then people kind of, now we're really off to the races. So call it January 2021, we're starting to see asset values going up 5% a month. I mean, cap rates were compressing dramatically. I had never seen anything like it. And the brokers, I mean, you talk to veteran brokers that have been in the business for 20, 30 years, man, they've never seen anything like it either. Now they're making a fortune. They're lighting cigars with $100 bills, but they know that, that the party could end at some point in the future. But right now it's a good time to be a seller. It's a good time to be a broker. But yeah, it kind of is what it is, man. There's a lot of money in the market. And then the other thing that's also happening too, right, is that you had people that kind of got crushed on hospitality, office, retail, which in the past was kind of the more traditional route that a lot of the institutional money took to get into commercial real estate. Believe it or not, I mean, there is institutional in multifamily, don't get me wrong, right? But they usually tended to stick with that type of stuff. Now, when their yield started shrinking on that type of stuff and there wasn't as many opportunities, they started saying, well, what's doing good out there in the commercial real estate space? And they started piling money into multifamily. They started piling money into industrial. They started piling money into self-storage and mobile home parks. Those 4 asset classes have done extremely well in comparison to office, retail, and hospitality. And so, you've just got a lot more competition now too, which is also driving. So you've got more money, more competition. The metrics are there because the rents are going up, and now everybody's into multifamily. I thought it was hot 2 or 3 years ago. Now it's really hot, and you are competing against some big firms, even on stuff. Then they'll step down just to chase yield to get B and C product as well. It's really hard. They'll put $1 million non-refundable earnest money day one. They'll close in 30 days, all cash. I mean, I have seen stuff that you just can't compete with, right? As a syndicator, like I'm not going to put $1 million hard day one. Like this stuff was built 30 years ago. I need to do some due diligence, I mean, but whereas BlackRock, they don't care. They're going to close it one way or the other. And guess what? If they don't make as much return as they thought that they did, it doesn't matter, because that 5 to 10% that they maybe didn't make, it's all part of a fund anyway. It all gets washed into their fund. And nobody's going to know that you got a couple stinkers that maybe you overpaid for, right? And so that's the competition. So I'd tell your listeners, right, and they're probably cringing because, I'm kind of just shooting it straight today, but that's where you're at, right? You need to be comfortable with stretching a little bit to get deals these days, because that's your competition, and your competition's got a lot more money than you.
Cody, it is super refreshing to hear Ben basically echo. I feel like I'm talking to myself or talking to you. This is basically what we talk about internally all the time. We've seen crazy things like, anywhere from $250K to $1 million hard, sometimes skipping title, passing straight through seller.
Yep.
Guys are basically giving up the boat to get these deals done. And we're just over here thinking, what are we doing wrong? And it's not necessarily that we're doing anything wrong. It's just that, we've got these institutional players. I know we've lost out on some best and final deals to some, 80 to 125 units. And we're like, whoa, why is an institutional player picking this product up? But you hit the mark on the head where they're just chasing yield. So it's definitely an interesting time to be in multifamily. I think you got to stay patient.
Yeah, you absolutely do, right? And it's like BlackRock buying a whole entire subdivision, right? Which they've been known to do, or parts of subdivisions. I mean, they're just trying to get economies of scale, and they have the money behind them to do it. So they'll gobble up the whole damn submarket if they can, right? If they like a submarket, they're going to go to a broker and they're going to say, "I want to buy the whole damn block," and we've seen them do that, right? So yeah, no, I mean, to your point, Brian, you're not doing anything wrong. Everybody that's out there that's chasing deals and they're losing out on stuff, don't get discouraged. Everybody's seeing it. Big firms, bigger than us, way bigger than us, are losing out on stuff to Wall Street firms or people that maybe are a little naive to our business, right? That still have money, but just, kind of coming at it from a different angle, through a different lens, and they don't care that they put $1 million up, or that they're doing, they're passing through, they're bypassing title and releasing earnest money directly to the seller. I mean, hell, I sold a property and I got the earnest money directly to us. I was like, man, that's actually pretty good. So as a seller, you're loving it. As a buyer, I'm like, man, I don't want to do that. I have no protection, but if you want to differentiate yourself from the pack, that's where you have to get creative. And what I've seen, and we've actually won deals this way too. And I know we're focusing on acquisitions. We're talking about asset management. This is an important topic, right? If you want to stand firm on price, I get it, right? But you're going to have to differentiate your offer from somebody else. So that means, hey, I'm going to stay firm on that $50 million offer, or that $20 million offer, or whatever. But guess what? I'll go from $500,000 in earnest money to $1 million, and I will reduce my inspection period from 21 days to 10 days, and this and that. Do something that's going to get their attention, because otherwise, if your terms are all the same, and this guy's another $1 million higher than you, the seller's not even going to pay attention. And so, and the brokers appreciate that too, because what they're wanting you to do is to stretch. And when they see you stretch, then they're going to know you're a player, right? They're going to know, hey, this shop is they're legit and they want to win a deal, and they know what they need to do to win a deal in this market. That doesn't mean you're going to win it, but at least the broker knows, the seller knows that you're legit, and you're not just trying to lowball. We were told, and this is a funny story, but we were told. So, I mean, a story for your listeners, right, is somebody that owns a lot of property here in Houston. You guys know them, so I'm not gonna name any names, but he was telling us, hey, you guys' pricing is like it's in 2015, so you're gonna have to step up on your terms if you want me to sell it at that price. And so, it was a little rude, but it was also a little bit, of a reality check for us, that we're still underwriting to, maybe a more conservative, time and more robust returns. And if we ever want to buy a deal, we're either going to have to step up more on price, or we're going to have to differentiate ourselves. So, that would be my advice to everybody, to look at your terms as well, and really get comfortable with your business plan and where can you, kind of squeeze more juice. And we're seeing, maybe this is a good pivot into asset management. There is a lot of other income that can be gotten from these properties that, maybe the last guy wasn't doing it, right? Because maybe his basis was lower. He didn't need to get as aggressive. So there's certain things that you can do, and people automatically think rubs, right? But that's not the only thing that you can do on these properties, right? There's a lot of other income potential that you can have the tenant now pay, and they're just willing, because that is the norm. That's where all your comps are doing too, right? So think pest control, think trash, think, so beyond water and electricity, there's other things, right? There's preferred parking. That's different than necessarily carports, right? Preferred parking is, hey, I've got a spot that's right adjacent to your unit, and if you want it, you can have it, but it's $50 a month. Now, here in Houston, rains a lot. It's hot. People have to schlep their groceries. Somebody might pay that $50, right? Or guess what? Or your next door neighbor probably would do it as well. So we're winning a lot of, other income, from our tenants through that type of stuff as well. And there's a lot of other creative things that you can do to kind of juice your return. So look at the other income line item when you're underwriting these deals, and don't just focus on rent growth, right? That's ultimately the easy route. The harder one is to really dig in and how can I extract additional fees from the property as well. People tend to also really try to look at what can I do to streamline expenses. And I fell into this trap many a times. At the end of the day, it's very unlikely that you're going to be some rock star that's going to save tens of thousands of dollars a month, in expenses over the last guy. Some of the properties fees just are what they are, or excuse me, expenses. And so you're not going to come in and drastically change that. So that's where you really need to look at income versus expenses too, when you're underwriting your deals. And, not to say that there's not like glaring things that they're overpaying on, right? And then some stuff that people should take a look at is insurance, right? They should also look at payroll. They should look at, if they've got a lot of turn costs, well, okay, guess what? If you've got a lot of turn costs, but you've got a ton of CapEx that you're going to be upgrading units on, maybe at least for year one, right? Most of that's going to funnel through CapEx. So you can maybe take that down for year one, right? And then utilities are the easy one, right? Oh, I'm going to do LEDs. I'm going to do low flow this. But, ultimately I wouldn't put too much on that, because I've done a lot of green program updates on some of our older properties. And I'd say the savings is like in the single digits, and you're spending a ton of money to get that, because you're going to put the shower heads in, you're going to put the filters in the faucets,
And then they take them off.
and they take them off. They take them. The low flow toilets are probably your best bet in terms of things that you can do to lower utilities. And then LEDs, right? Now, not necessarily LEDs in the units, but LEDs throughout your property, right? Those are gonna suck a lot less juice. And so that's another way that you can potentially save on utilities as well.
Yeah. Ben, I'm really glad we've segued into this conversation, because I think that moving forward into this new decade that we're in now, post recovery, asset appreciation, just at it, like you mentioned earlier, just an incredible amount of appreciation. Yields are getting harder to come by. Like you can no longer, target deals, at least we're not seeing in the multifamily space, deals that are 10% cash on cash and things like that. And so I think the focus and emphasis is now going to be on who's the best operators, like who is the best asset management. And that's where you're really going to get the best bang for your buck, because, yes, this is probably going to ride out for a couple of years, and you're going to have some guys that still are going to do okay, just from the organic appreciation. However, from an investor standpoint, when you're raising tens of millions of dollars to bring to these deals, you have a responsibility to protect those investor interests. It's all based on your ability to execute your business plan. Yep. And so I think this is such an important topic, because to me, like you always hear in real estate, right, the best, you make money when you buy, but I would also argue that really the money's made in the operations, right? The execution of the business plan. What do you think?
That's absolutely true. I think the best operator wins. I always tell people, hey, look, you have a good operator can make a bad deal good. You have a bad operator that can make a good deal bad, right? So, you really need to. And we invest passively as well. So I look at this. People are always asking me, well, who do you invest with, and what do you like to see? I always start with the person or the team. Who's the person in the team? Then I look at the submarket. Then I'm looking at the property, right? Because ultimately, I'm backing the jockey, not the horse. Right. So, people really need to like, know, and trust that the people that are getting into the deal and that are going to be operating the deal have the acumen to do it. Right. Or they have the team behind them that can pull it off. Right. So, I mean, and you're going to have listeners that are starting off. Everybody starts off. I started with nothing. Right. So there's another level of trust and faith that your deal is going to perform on that for those first couple deals. And then hopefully that track record will start kind of, helping you get people more comfortable with it. But yeah, no, I mean, I think people this is going to be the decade of the operator. I've been saying that. I think, yeah, we're going to have that organic appreciation. Don't get me wrong. But, to have any kind of cash flow, any kind. So we're taking appreciation off the table, right? That's just the icing on the cake, right? To get any kind of a cash flow, you have to have a good asset management team and a good property management company. right? And so for people that are listening, I'm sure you guys have talked about this on the show. What is the asset manager's job? Their biggest job is to make sure that the property management company is doing their job. They are implementing your business plan and they are doing the correct things, right? And ultimately, if they're not, then you need to step in and you need to right the ship with them, or you need to fire them and get another company in. And, me and Ferris have had our fair share of horrible stories that I could go on and on about property management. And that's ultimately what led to Disrupt Management. But that's at the end of the day, that means that you just need to have just that much more strong of an asset manager, because property management companies by default are just not all that great, right? They're good at best. So you always need to be pushing them, especially on expenses, and especially just, keep pushing the needle. They tend to, even on cleaner properties, quieter properties, they just let it coast, right? They have no reason, because the regional is off dealing with the horrible properties, and they're just going to let this one be on cruise control. Well, guess what, man? I want to push the yield a little bit. Why are you just going to let it, be on cruise control? We're going to push the needle. But they don't want to do that because they're so busy, handling the horrible properties. So as an asset manager, you need to be looking at it weekly, at the numbers. You need to be creating your own reports, outside of what you get from the property management company. You need to be tracking units that are being turned, unit costs. What is the return on that investment? Make sure, on top of, managing the property management company, you need to be managing the construction and the rehab as well. I've done $1 million rehab projects, and I've been the construction manager on them. There's a lot that goes into that too. So, but if that is going to be a big part of your business plan, then you need to be on top of that day one too. And don't let it don't just assume, oh, we've got some organic rent growth, so maybe I'm just going to take my foot off the pedal on the unit upgrades. Don't do that. Push, right? Because you just never know. The party could stop. Expenses that you underwrote could be higher than you thought. Something, detrimental to the property could happen that you're going to have to pay for. So it's better to get as much income in as possible, so you can weather those, I guess, uncontrollable things that always happen on these properties.
See, this is why you don't hear about asset management so much as you do the acquisition, because this is, you have the good, the bad, the ugly. I would definitely argue that asset management is definitely not the flashy stuff, and probably the most labor intensive, right? I mean, you're putting in a lot of invested time and interest into developing those KPIs,
Yep.
having the asset management calls, making sure execution is going well. If you have to change vendors or change property management, it's a ton of work. And
yep.
As you've alluded to us in the past, Ben, with your property management company, it's a lot of work, and that reimbursement on that time and effort is probably not quite as lucrative as you would hope so. So
no, the property management company for us is a break-even deal, right? We did it for other reasons, right? More for control and transparency over our own assets. So we could make sure that the money was being spent the right way, that things were being done the way that we needed them to be done according to our business plan. So it was never meant to be a moneymaker for us, but you hit it right on the head. Asset management is it's where the rubber meets the road on these. I mean, everybody talks about the flashy, I raised 20 million bucks and I've got $500 billion in assets under management and all this other crazy metrics, right? That really get people that are new to the industry excited. And sometimes even people that aren't new to the industry, kind of have a warped perception of that person because of these big, gigantic numbers that they flaunt. But at the end of the day, what really matters is the returns, right? If that person has never exited anything and never returned any money, then at the end of the day, it's all fluff in my book. And you need to have a couple years into this to really know, and you're going to take some lumps. It's not easy. And you really need a team too, because once you get past, I'd say, I'm going to call it probably 2 to 4 properties. Don't think of it in terms of units, just think of it in terms of properties. That one person or those 2 people are probably going to start getting maxed out, right? Because you're not going to have enough time to go find your next opportunity and do property tours and, make offers and underwrite deals and everything else that goes into running a multifamily commercial real estate firm. Because you're doing all the asset management, which takes up a lot of time too. And the other part of asset management, which is kind of a subset, is also investor relations, right? You're going to have investor questions. You're going to have to put the monthly updates or quarterly updates, depending on your shop, out to your investors. You're going to answer those questions. You got to put those K1s together. You got to do cost segregation and make sure that you can get that depreciation. All of this stuff takes time. And so, asset management is very time intensive, but I would say it's probably the most critical role outside of the property management role of being successful in this business. And if you can build out your shop with those two things in mind, I'm going to have the best asset management department, and I'm going to either create my own management company or have the best operator that I can partner with. You can go out and buy any deal and you'll always be successful, right? Maybe not always, but most of the time, 9 times out of 10, right? There's always going to be the one that the market screws you over on or whatever might happen. But you get my point. Whereas if all you're focusing on is acquisitions, right? And I've seen this happen, and I hate to admit it, this kind of happened to us too, where you buy, and it's just like, when you stop 12 months later, you feel all good about yourself that you bought all this stuff, but then you've got a ton of work behind you that, hey, you got to go back and make all this right and figure all this out and make sure that those deals perform. Right. So the quicker that you can figure out the asset management piece, automate it as much as you possibly can, develop those KPIs like you talked about, that's important to you, not necessarily what the property management company tells you should care about. You need to care about something outside of what they're and screw them. You ask them for the data. Say, hey, even if you have an one-off spreadsheet that they need to fill out, tell them to fill it out. That's what their job is to you are the owner, you are the client. You need to say, hey, this is important to me and my investors and to the success of this property. And you're going to help me develop these KPIs and track them on a weekly basis. And the quicker you find that out and figure that out and what is important to you, that's going to make the acquisition process a lot easier because you're going to have time to do it. Right.
Yeah, I mean, look, ultimately, like you said, I mean, you are the captain of the ship still, so to speak, right? Even though you're the asset manager and you have a property management team in place that maybe you're hiring to do the day-to-day, ultimately the responsibility still falls back on you to make sure that they're executing. And if they're not, I feel like the property managers, they probably get the finger pointed at them the quickest, but in reality, you got to look at yourself in the mirror sometimes and realize like, hey man, you're the one that's actually in control here, and you got to be able to pivot and adjust if you need to, and quickly. Because one thing that as you're talking about how quickly things can go wrong, the reality is too, when things do deviate from the business plan, it can take sometimes weeks, months to recover from maybe a drop in occupancy or fall off in NOI, whatever the case may be for that month. And so if you're not paying attention to that every day or every week, you could put yourself back for several months, right?
Absolutely. No, I mean, sometimes years. You let your guard down for a couple months. It could take you 12 months to make it back. The things can go wrong so quickly in this business that, I tell people just be proactive. Don't assume that the property management company is doing anything right? You need to be tracking every data point that's important to you and asking them about it, right? Because like you said, if something goes off track, it's going to take you a while to work that back. And, ask me how I know. That's, once again, a lot of this stuff, I've learned the hard way. The one thing that I'd say that I've learned, and I'd known this even prior to my real estate career, is, I'm going to make mistakes. Mistakes are going to be made. But I ain't going to make that mistake twice. And so, at the end of the day, you learn from, hey, yeah, that was kind of stupid or bonehead stuff, now I know how to track that more effectively, so I can be more proactive in making sure that never happens on any of our properties ever again. And so I don't want people to beat themselves up that you're going to know what you don't know right off the bat, right? You're going to have to learn some of this the hard way. And some investors are probably cringing that we should have gone to college for this stuff, but ultimately this is not something that they teach in college. And the best training programs, and trust me, I've spent tens of thousands of dollars on a lot of this stuff, does not teach you how to do how to be an asset manager. It just doesn't. And I've talked with Wall Street asset managers. They don't know what the hell they're doing either. So it all comes from experience, right? But you can kind of, maybe bend that curve down a little bit, by having the right team and really thinking through your business plan. And okay, so I want to push rents, to this So, or let's take it for example. I want to update 100 units in the next year. And of that, I want to get $100 premium on all of those, right? That you can start kind of backwards walking into how do I quantify that each month, right? You can start looking at turnover, right? Okay, so the typical turnover for this property is, let's just call it, 10, right? So typically I could be able to update 10 units because there's already turnover just organically from that. Now, maybe you say, well, let's just maybe use a smaller number. Let's call it 5, right? All right. So now that's only going to get you this, what is that? 60. It's early. So I'm trying to do some math in my head. So, but okay. So now you need to get 40 more. How do you do the 40? Right? Well, okay, we've got some renewals coming up. Maybe let's increase the renewal amount. If they stay, great. Don't have to turn the unit. But some of them are going to tell you to go pound sand. Guess what? That's going to get you the other 40. Right? So you can start thinking through all this stuff is not rocket science. People have to look at it more methodically and track it each week, each month, and say, are we getting closer to our goal? I always tell people what I do is essentially project management on steroids. And really the acquisition process is project management as well. So I think the people that I've seen most successful in this business that have come off of another career are either project managers or they're somebody that's really good with data and spreadsheets, right? And those typically be IT guys or engineers. It doesn't mean that other people can't be successful either, right? I was a sales guy. The hell do I know about any of that stuff? But at the end of the day, that stuff, those skill sets will segue into asset management as well. And you can kind of start figuring all this stuff out. But what people will assume is you told the property management company that you wanted to update 100 units and that you wanted a $100 premium. And then you just expected that they were going to do it. Well, guess what? Now you start looking at the numbers 6 months in, they've only done 20. And that $100, they only increased it by 50. And you're going to go, well, what happened? Why'd you only do it by 50? Oh, well, we're trying to keep occupancy up. You want to keep it above 90, right? And they'll start kind of backpedaling a little bit because they know that you're pissed off and they'll come up with some excuse. But really, guess whose fault that was? That was the asset manager's fault, right? Because you weren't tracking that. You weren't pushing them every week to update units and make sure that every lease that they did had that $100 premium on it, right? So, people always kind of, there's a lot of mysticism around asset management. At the end of the day, it's just a numbers game and tracking KPIs. If you can figure that out, you'll be successful in this business, right? And people are going to be like, what KPI should I track, right? Talk with your property management company, talk with people that are inside the business that have been doing it for a while and ask them, right? And then you'll start figuring all this stuff out.
Yeah, I think it goes back to the old saying, you can't manage what you don't measure, right? We've all heard that in every industry. And I think that goes to without saying here in multifamily, especially when you start to have multiple assets, like you said, you're not, on the property every single day. You're not able to see everything. So you have to let the numbers tell you a story. And then as you gain experience, you start getting better and better at reading those numbers and sort of seeing the story. And then your gut starts to kick in too, based on prior experiences. So I think tracking those KPIs is super important and something that Cody and I definitely talk about pretty regularly.
Yeah, no, definitely. And I would say that there's probably an opportunity there, and I think there is some guys that are starting to kind of, pull the curtain back on asset management. And maybe there's going to be some tools over the coming years that, that will be out there. They'll make this stuff a little bit easier to track. But for right now, your spreadsheet's your best friend, there is a lot of reports out there too that the property management company can provide to you. But like I said, if ultimately there's something one-off, you ask them for the data and then you create your own spreadsheet, So,
Ben, listening to you go, explain just the really the truth about asset management is what I'm going to call it, because that's what this is. I mean, this is the real nitty gritty about, how this business really operates. And so we appreciate that because I think that's the best lessons learned is from just, people see the guys on stage and like, oh yeah, that's great. But they don't hear the headaches that they went through to get to that point, which is, the details of what we're talking about today. But I also think when it comes to asset management, it takes a very special, I would argue, a skill set or personality, because you also have to be able to have the ability to pivot and not panic, right? Because like you said, things are always going to come up. Things are always going to be happening, even things that no matter how good of an operator you are, things that you just can't predict or control, like a pandemic. But you can't get into panic mode and then start, running your reels crazy trying to figure out solutions on the fly. You have to really be able to be strategic and level-headed when making those decisions and make the necessary pivots. Would you agree?
Absolutely. I'd say communication is probably another skill set that somebody needs to have. They need to be able to effectively manage the team, because we've been focusing a lot on the property management company, but, there's other parts of asset management you have to articulate to your investors, right? So you need to communicate well with them. You're going to need to communicate well with your lender. Your lender's going to have requirements. So, and so I would agree, you definitely need to be a smooth operator, so to speak, or you need to find somebody that can make decisions under pressure, because, I always say, don't, expect that something is going to happen on every single deal, that those projections are what they are, the projections, and that things are going to deviate. And you just need to be able to deviate and pivot as needed to be able to continue to move the needle forward. And if you can communicate that effectively with, confidence with people, and say, this is what we're going to do, guys, and this is the reason why we're going to do it, this is how we're going to track it, people get on board. They love confidence, right? You say anything with confidence, telling you, people will believe you, my friend. And at the end of the day, if you can back it up with some KPIs and some data, say this is the reason why we're going to do it, boom, you got them sold. And then it's all about just keeping consistently communicating with them and keeping them accountable for what's expected of them. So, communication is key as an asset manager as well.
Sure, absolutely. I think that probably rings true across any aspect of our business. Absolutely, and any, it's a people industry. Every aspect of our business, we're touching or interacting with people, and so that's, communication is key. But, Ben, we're kind of getting near the end of our time here, so I want to get a few more questions in for you. But really, with your experience as asset management, we talked about, this decade being the decade of the operator or the asset manager, so to speak. Do you see a change in expectation in the residents in today's age where, COVID forced people to be at home and have more convenience in their living spaces? They're looking for maybe amenities that will help make their living spaces more efficient or more comfortable. Do you see a change in the resident expectation as far as what type of service you're providing as an asset manager to them?
I'd say my role doesn't go all the way down to the tenant level, but I think that we can influence, maybe the life at the property through the property management company. I'd say some of this stuff is pretty, you think about it, and I'll mention some stuff, package lockers. We're starting to roll that stuff out on some of our Class C properties. Now, ultimately, where do we locate those and everything, keep them secure is a question, but more and more people are shopping online. Don't just think Amazon, just think across the board, right? And so more and more people are asking for that because it's become, and COVID really put us in a bind. And at some of our properties, we were getting inundated with packages. And then you're having to keep up with everybody's packages. Oh, where'd my package? They said that it was delivered and now we can't find it. So, now we're on the hook somehow. So package lockers first and foremost. I think, keeping a good fitness center and keeping it clean consistently where you can show people that you're keeping it clean, is another thing too, because people aren't going to the gym as much. They're staying home more, but they still want to work out, right? They want to burn off that negative energy that comes from staying at the house too long. And so fitness centers, I think more and more people have pets these days. You really need, even in your Class C properties, you need to have, it's such a cliche, you have to have a dog park. You need a place where people can go walk their dogs and there's not going to be, dog whatever all over the place, but it's also going to be a good amenity to show off as you're trying to lease to that tenant too, that you care about having pets there and you're creating a space for them and their animals. Right. So I think that those are three things. And some of those were pre-COVID. I'm not going to say that those are revolutionary because of COVID. I'd say maybe the package locker is something that's really, I think is going to be almost obligatory on almost all properties moving forward. And there's a ton of, companies out there that do that, including Amazon sells their own. But, those are things that you're going to have to cater to, depending on the property that you own. And if more and more tenants are working from the house, permanently, or there's some kind of other additional lockdown, you need to create that space where they feel comfortable staying there, right? And so those are three things that I'd probably focus some energy on, because I think that those are there to stay, and it's probably only going to grow from there.
Brian, we just got a master class on asset management. What do you think?
Oh yeah, I love talking about this topic. We say this all the time. Not enough people talk about this. It's so refreshing to hear from actual operators about getting their hands dirty and what's really going on in the industry and what it takes to be successful ultimately. So this has definitely been a great conversation. We appreciate you adding value from the asset management side, Ben.
No, I appreciate it, guys. I mean, I could go on talk about this stuff for hours, but I know we only got a limited time. But yeah, I think it's something that people need to educate themselves on. And like I said, I'm glad to see that there's more and more resources out there about this online. But I'd encourage anybody, even if you're going to own your own deal, right? Find out about this skill set, right? Because even if you're going to own your own deal, unless you're out there collecting rents and plunging toilets on your own, you're going to have a property management company in place, right? And you're going to have to keep them accountable. So asset management is that role. So learning more about this and what are best practices and what are some KPIs that you should be tracking, and maybe some spreadsheets or some tools that you can use to make it more effective is important, even if you own your own deal, not just through syndication.
All right, Ben, one last legitimate question. I know the answer, but did you start losing your hair before you asset management or after?
Oh, Ferris always likes to joke about this, right? That it was this deal or that deal that, ultimately, led to my baldness. But no, this was way back in the day. I've just rolled with it and went Bruce Willis style way before it became popular. But no, I would say that there's been a couple deals that haven't helped my hair grow back. Let's just put it that way.
Oh man, good stuff. Well, hey, listen, it ain't for the faint of heart, man. It is a responsibility that is absolutely critical, but it does take that special person and operator to be able to put in that work, that time, and that effort, and make it successful. So, great to have guys like yourself, sharing the insights. So really appreciate you. So, but hey, before we go, we got 4 more questions for you, and then we're going to wrap up here. So,
all right, what do you got?
Ben, one thing that we love to ask all of our guests is, what are you doing for your continued education to further your own investing?
Further my own, I'm looking into different asset classes, looking into different investments, right? I mean, we've got a lot of investors. They're looking to deploy a lot of capital. Multifamily is always going to be our bread and butter, but I'm always looking for what's another good opportunity. And then ultimately, going and getting myself educated. I think this is real estate as a business that you can continually learn. And I always tell people, don't assume that you know everything. Keep getting it. Listen to podcasts, read books, be on webinars, go to events, right? It's important because there's always going to be some bleeding edge cutting thing that you need to know about.
Yeah, great point. Yeah, I love the way you said that. Don't assume you know everything, because I feel like no matter what level of experience you get, there's always something new to learn, right? The industry is ever evolving, so that's a great takeaway. Ben, looking back at your business, is there a time or event throughout your business that kind of changed the trajectory of your business?
I would say it was COVID. That I know that's probably what most of your guests are probably saying these days, but it really did open our eyes to, hey, we probably need to change the way that we do things, not only on the property management and the asset management side, but on the acquisition side, like I had alluded to earlier in the show, right? So I'd say that was the event that really opened our eyes to, maybe we should look at different ways of doing the business.
Yeah, actually. What piece of advice would you give to listeners to help them grow their businesses?
I would say first and foremost, take action. People have a tendency to try to overeducate themselves or analyze the heck out of everything. And I'm telling you, there's people that are doing deals every single day. You've got to take action. Don't get analysis paralysis is what we like to call it, right? Where you overanalyze every little risk that could possibly happen. Trust me, SHIT is going to happen, right? Just mitigate it as much as you can and go out there and dive into the deep end and just get things done. So I'd say take action is the first and foremost thing that you should do.
Love it.
Boom. Love it. Awesome, man. Well, listen, tell the audience how they can learn more about you and get connected with you guys over at Disrupt.
Cool. Yeah, so you can check us out, www.disruptequity.com. And you can also drop me a line at ben at disruptequity.com. And, as people can probably tell, I like to talk shop. So drop me a line. We can set up a chat and kind of go from there.
Awesome. I'll add to that, Ben. If you're in the Houston MSA anywhere, you got to get over to the Disrupt Equity Meetup every month. It's a phenomenal event. We've been going for years. Just love the network that you guys have built, the community that you guys bring together, and always the wisdom that you guys share. So really respect both you and Ferris quite a bit over there at Disrupt, Ben. So really appreciate your time today.
Thanks, buddy. Appreciate it.
Thanks, Ben.
Thanks, guys.
Next one.